Billionaires aren't like the rest of us when it comes to money. They see trends before anyone else. And right now, they're quietly moving billions into one asset while the world isn't paying attention. What do they know that the average investor doesn't? Why are the wealthiest people on the planet racing to buy this one thing? In the next 10 minutes, I'll reveal the asset billionaires are buying right now, the hidden reasons behind their moves, and how ordinary investors can take advantage before the rest of the world catches on. If there's one thing history has taught us, it's this: billionaires invest when others hesitate. Think about Warren Buffett in 2008. While panic gripped the market, he was quietly buying Goldman Sachs shares and securing sweetheart deals. Or Ray Dalio, who bet against the US housing market before the 2008 financial crisis and made billions for his hedge fund, Bridgewater Associates. Today, a similar pattern is emerging. The ultra-wealthy, Buffett, Dalio, institutions like BlackRock, are piling into one timeless asset: gold. But it's not just old-school gold bars in a vault. This move represents a flight to safety amid a storm the public doesn't fully see yet. So why gold? Billionaires are flocking to this asset for three key reasons: protection, opportunity, and timing. Reason number one: gold protects wealth in uncertain times. Gold has served as a store of value for thousands of years. It isn't tied to the performance of companies or governments in the same way stocks and bonds are. Whenever markets get shaky or currencies lose value, gold often holds steady or climbs. Reason number two: the smart money sees opportunity. According to the World Gold Council, central banks purchased over 1,000 tons of gold in the past year, the highest in modern history. Billionaires and institutions like BlackRock are mirroring this trend because when central banks hoard gold, it often signals long-term concerns about currency stability. Reason number three: timing is everything. Over the past decade, gold's price has traded in wide cycles, but in 2025, it's been quietly rising against the backdrop of market volatility. For billionaires, this isn't just about safety. It's about positioning for potential gains if markets swing or inflation persists. To understand why billionaires are buying, let's look at what they've actually been doing. 1. Warren Buffett's quiet gold bet. In 2020, Buffett's Berkshire Hathaway shocked the market by buying shares in Barrick Gold, a leading gold mining company. While he later reduced the position, analysts saw this as a signal that even Buffett, famous for preferring productive assets, wanted exposure to gold during uncertain times. 2. Ray Dalio and the hedge fund playbook. Ray Dalio, founder of Bridgewater Associates, has consistently emphasized holding gold as a hedge against market instability and inflation. His mantra, cash is trash when currencies are debased. 3. BlackRock and central bank alignment. BlackRock and other institutional giants have been loading up on gold ETFs and mining exposure, aligning with global central banks, which collectively bought more gold in the last 12 months than at any point since the 1970s. These moves aren't coincidence. They're calculated hedges against risks in the global economy that most retail investors either ignore or notice too late. So what's pushing billionaires to this asset now? There are three major macroeconomic forces at play. 1. Inflation and currency risk. Despite central banks trying to tame inflation, prices are still rising globally. Fiat currencies, like the US dollar, euro, and yen, lose purchasing power during inflationary cycles. Gold historically serves as a hedge, meaning its value tends to rise when currency confidence falls. 2. market volatility, and recession fears. Equities have experienced wild swings, and several analysts are warning of a potential global slowdown in 2025. Gold is often called a safe haven asset because it performs well when investors flee riskier assets like stocks. 3. Geopolitical uncertainty. Ongoing conflicts, trade disputes, and BRICS currency experiments are creating uncertainty in the global monetary system. Nations like China and Russia are buying gold at record levels to diversify away from the US dollar. When you combine inflation, volatility, and geopolitical tension, you get a perfect storm, one that billionaires are reading as a buy signal for gold. Here's the question: what can you do about it? Billionaires and institutions have the luxury of moving billions into assets quietly. But ordinary investors can still benefit by taking calculated, smaller steps. 1. Consider gradual exposure to gold. You don't need gold bars in a vault. Options include gold ETFs, mining stocks, or even fractional gold apps. 2. Balance safety. With growth, gold is a hedge, not a get-rich-quick asset. It works best as part of a diversified portfolio, not your entire investment strategy. 3. Stay ahead of market signals, watch central bank activity and inflation trends. Billionaires follow data, not headlines. Doing the same can help you spot trends early. Remember, the goal isn't to copy billionaires, it's to understand their logic and apply a version that fits your personal financial situation. The world's richest investors are rarely reactive, they're proactive. And right now, their quiet accumulation of gold is a signal that economic uncertainty is far from over. Whether the next year brings inflation, market turbulence, or currency shifts, those who prepare today will be in the best position to protect and grow their wealth. If you found this video helpful, hit the like button, subscribe to MacroMentor, and turn on notifications so you don't miss the strategies and insights that keep you ahead of the curve. This is MacroMentor, helping you navigate the big picture of money and markets. Stay informed. Stay prepared. And I'll see you in the next video.